Good morning, traders, and welcome here to the weekend update on April 21st, 2024. So there's some good and some not so good in this week. This will be one of the more challenging weekend updates as far as what the market did here this last week, and you'll see what I'm talking about here in just a minute. From the good side, closed out two trades this week. This first one was in SPY, and it closed at essentially a scratch. It was up, I don't know, 0.5% or something like that. But you can see there was a lot of adjustments on this. And of course, you can go back and roll through this as one of the members to the alert service. You can go back and you can see every single adjustment that was made, the date it was made on, all of that information. So it's going to move, of course, from our live circle down to the closed trade archive circle. And again, those of you that are members know that there's hundreds of trades here that you can go down and go through, good, bad, and otherwise. So anyhow, so this trade's going to be moving down to that category. And then the next good this week is this trade was closed out. This is an SPX trade. This trade closed out for a decent profit. This was up about $1,200 or so. A lot of adjusting in this one as well. Again, the market moved quite a bit and had to do quite a bit of maneuvering to get this trade closed out. Now, to the good side, had I not done that, our market sold off down into here, this trade certainly could have given back a decent amount of profit had it not been closed here when it was closed prior to this market sell-off. Now, that said, there's still some remaining trades that are open that are under a little bit of pressure right now. But this is how we learn. This is how you get through the process of figuring out how to adjust these. Of course, there's always the option of taking the deep dive butterfly class or the calendars and diagonals class, and that will walk you through all the different scenarios and possible adjustments to consider in these big market moves. Now, if you have not been through that class, you went through a mini version of that class here this last week because I used a lot of the strategies that are laid out in those classes to help people understand different ways of adjusting. So on this particular butterfly, this SPX butterfly, as the market sold off, I basically widened my tent. I added a second butterfly here, but that second butterfly wasn't skewed quite as much as the first one was. So it didn't give us, we didn't increase our downside risk by much in that adjustment. We did increase our upside risk a little bit, but we're now back centered in that tent. We've got a nice amount of theta decay, $46 a day in theta decay, and then our deltas are essentially, you can see in the far upper left corner here, we're essentially flat delta. So good place to be in this trade. Obviously, I don't like the fact that it's down, but as soon as we get a little bit of relief in volatility, this T0 line will mound up quite rapidly. But we got to start getting that volatility release first. So from here, I want to go to the next SPX trade. Similar scenario, adjusted this one a couple times as well. And again, this is where we learn on these. You can see this one started as a bearish butterfly. So it fared better as the market sold off because it was put on when the market was at all-time highs with an expectation that we might get a pullback. But even a bearish butterfly, while it does really well for the first 100 points of a pullback, as we're now into 300 and 400 points of pullback, it needed to be adjusted as well. But it's holding up quite well. Again, if the market stabilizes here or starts to move up a little bit and we get a release in volatility, this one should show some fairly quick profitability as well. So those are the two SPX trades that are open. And then, of course, the SPX and the SPY trade that we closed that I just ran through. And then we've got the two trades that are in stock. So this is the Apple trade that was put on all the way out with a 6/21 expiration. Now, I am still a bull in Apple. I do believe that there's going to be some very good things they're going to be announcing. But I do also recognize that I probably am going to need to consider something here. You can see this dashed line is one of the possible adjustments that I'm looking at. And Apple has earnings coming up. I don't know if it's this week or next week, but before too long, Apple has some earnings coming up as well. So I'll have to figure out a little better game plan, or if I need to change my game plan as we go on to earnings. But again, earnings report to me wasn't my catalyst for this trade. My catalyst for this trade is what I'm expecting them to introduce in the way of a total remake on Siri using artificial intelligence or using much stronger AI models as we get into what's called the WWDC conference in early June. That's where I'm expecting a sizable shift here in Apple. And again, I did this in a larger size. I told people I was doing it in a larger size when I did it. In retrospect, of course, I would have liked it if I had added on to this trade going in instead of taking on my full size up front. But many people probably took a much smaller size or maybe didn't even take this trade. I don't know. Similar story with NVIDIA, although I do have this one adjusted now to a place that I feel good about it. But NVIDIA had started as a very sizable, for me, condor. I called it a skewed condor with a downside hedge. And NVIDIA was trading all the way up here in this 980 range or so at the start. And then NVIDIA sold off really hard over the past few days. Now, the first couple days, it just drifted lower. When it drifted lower, the extra long put I had as the hedge there didn't help a great deal. And it actually allowed this to draw down a little bit. But as soon as the volatility really spiked in NVIDIA here on Thursday, Friday, that long put gained in value and lifted the T0 line back up. Now, if I had felt that NVIDIA was going to be tanking much further, I may have just left that trade intact because that put was going to become more and more valuable. But I'm not sure that's going to be what's going to happen there. I think NVIDIA might have sold off to a point where it's going to stabilize. And you'll see why when we get into our market analysis here in a few minutes. But as a result of that, I just wanted to reconstruct this entire trade. I had about $20,000 in downside risk in this trade at one point. I stripped that all the way back to just being about $3,000 in downside risk. And I built up a very nice tent here, butterfly, that if NVIDIA rebounds 50, 60, 70 points somewhere up into here, this trade is going to do extremely well as that volatility releases. Now, I do need to look at pulling off this call spread over here at some point, and I figured I'd just wait and see what our markets did on Monday before making a decision on this. But I will likely remove this risk as well and essentially be in this position as a butterfly with a really good reward to risk ratio, I might add. Again, the risk being, once this is pulled off, about $3,000 with a reward of potentially 20. Keep in mind, in a butterfly, I'm never shooting for that because I'd have to carry this whole thing all the way to expiration. But I do look at that as a measure of the quality of the trade, or whether or not this is a trade that's worth sticking with for a longer period of time. And based on that reward to risk ratio, yes, I definitely like that setup. Again, don't like the fact that it's down a little bit right now, but I like the position that it is currently in. So those are the current open positions. I am going to probably look at opening another new position this next week, possibly in SPX or maybe even in RUT. And again, you'll see why in a moment here when I go in and I start looking at the charts and we start looking at our markets as well. So let's go take a look at that right now. So if we look at SPX, one of the things I want to point out is I want to take a look at the prior waves that have happened in SPX. So if we look at these waves, this particular one here, that was about a 6%, a little over 6% drop when that wave occurred. Look at this one. This one's running about 6.5%, 7%, somewhere in that general range. This one was in the 6-7% range. Okay, so we've had here last year 3 decent drops that were all in that general range. Now we look at this one right here, and we are right in that same general range. We're pushing right at that 6% area. So given the prior waves that we've taken, one of the tells, if you will, or one of the reasons that I think this might start to stabilize is that we're basically in that same range right now. We're right at that 6% drop area. Okay, so that is telling me that we might start to slow down. There is also what I would consider to be a little bit of support right across here. We can see that top, and then we've got 2 or 3 bottoms here. And so that could be support. A stronger area of support, which I've had this drawn on here for months now, is this 48.20 range. I would consider that to be even stronger support. Another thing to notice is this light blue line here. Volatility really spiked on Thursday and Friday, and then volatility sold off during the day. So volatility became less during the course of the day. Oftentimes, that decrease in volatility that occurs during that period of time is also a little bit of an indication that this down move may be exhausting. So that's one thing to look at in SPX. And let's look at VIX, and we'll see the same thing. Helps if I could type. When we look at VIX, volatility spiked all the way up here to some prior highs at the open, and then volatility dropped during the course of the day. So again, that is oftentimes a sign that there's going to be a little bit of stability coming in. We'll have to see how that plays out. Now, those are things that tell me that there might be a little bit of stabilizing coming in. So let's look at SPY, and this kind of tells a little bit of a different story, and then we can see that volume picked up quite a bit on SPY. Okay, particularly on Friday, as we sold off more and more throughout the day on Friday, more and more people started selling out. Now, I don't consider that to be a capitulation, if you will. A lot of times you'll end up with really big volume spikes on days that the market starts to change. So I don't feel like we've seen that, what I would call a flooding or capitulation sell-off yet. That volume is higher, but not maybe as high as I might expect it to be. We can also see that volatility on SPY did not drop off as much as volatility in SPX. Again, another kind of a sign that if you look at SPY, it's telling a slightly different story. It's telling us that yeah, this may not be over yet. Then if we look at other things like the Qs does look a little bit more like a capitulation sell-off. It's a much higher volume here. It's also at what I would consider to be a good potential support area here, or a reversal area right around this 415 range. Again, we'll have to see how that reacts on Monday. My expectation here might be it could sell off a little bit further below that and then maybe come back above that 415 by the end of the day on Monday. That would be a good sign for the techs, if you will. If we go down through this 415 range on techs, I think the next logical point here is 390. Somewhere right down in this general range, the 400 to 390 range on the Qs. So those would be my two expectations. Either we hold here in the 415, or we're probably down around the 390 range. And then if that were to happen, if we were to get down into the 390 range, I would expect even more volume to come in here. And that could be a little bit of a capitulation then in the techs. So let's take a look at RUT. So RUT is coming right into a zone that I have had drawn on here for a long time now, 6 months. And my expectation on RUT is that it's coming down to this general line that, again, I had deemed previously as being a bit of a support area or a battle area, if you will, with support and resistance. And we also have this blue line here, which I believe, if I remember, that blue line is my 200-day moving average. Many times, a 200-day moving average is also a support area. Now, it did finally break here, but many times when you come down to a 200-day moving average, that's what a lot of big money investors start to look at. That is a sign of, okay, we've pulled back to an area that at least we're not buying something that's overbought at that point. There's likely to be some upside potential in the stocks that make up the index or the index itself at that point. So for this reason, the fact that I think there might be a little stronger support here in RUT than what there might be in SPX, if I were to launch a new trade right now, I would probably lean toward a broken wing butterfly or butterfly with a long call in RUT. So those are going to be the things that I'm going to look at here Monday, Tuesday of next week and see how that might play out. And again, might look at a new trade coming in here. One of the benefits of butterfly trades is you can put on those butterfly trades in this higher volatility environment for a much better reward to risk ratio. Again, get into that a lot in the deep dive class. And that's why many of our trades right now are hurting the way they're hurting, is volatility has spiked after we put the trade on. If you put the trade on during spiked volatility, and then that volatility starts to diminish as the trade goes forward, that's the best case scenario for butterflies. Now, do I know for certain that volatility is going to decrease from here? No, I don't. But when I know that volatility is up as relatively high as it is, and we don't currently have an impending situation like COVID where nobody knows what's going to happen, what we have now is regular interest rate concerns, some political unrest, etc. Those are things that unless something makes those dramatically worse, they're normal situations. So based on that, people's minds start to adjust fairly quickly to the new reality, and that volatility then eases up as more and more people become comfortable with, oh yeah, we had another sell-off. Oh yeah, it's similar to the prior sell-offs, and it may hopefully be over here soon. So for those reasons, I'm thinking that there's a more likely chance of RUT stabilizing or bouncing off of this, which to me might make it a decent candidate for butterfly of some type. So if I were to add a new trade this next week, right now this is what I'm thinking. That's my most likely scenario that I'll be going to. So that is a wrap up here on the market and our current positions for this week and the game plan for the next week. There's going to be a lot of earnings happening here this next week, and that's going to decide or help determine what's going to happen with the market. Historically, earnings have been really strong, even though interest rates have been up, etc. So we need to see if that's going to continue. Netflix, even though they tanked here this last week, they had strong earnings. They just gave a sour outlook going forward. And that can happen with other major companies announcing this week. They could have great earnings, but they could give negative prognostications, if you will, going into the rest of the year, and that could sell things off. But overall, how these earnings turn out is really going to give the market a direction over the next probably 2 to 3 weeks as we go through earnings season here. So that's it for now and the weekend update for this week. Take care, everyone.